Hello and welcome to tradingfloor.com's weekly Asian focus. In this video with Andrew Robinson, market analyst for Saxo Capital Markets in Singapore, he looks at expectations for the all-important Communist Party Congress, as well as key data from China this week. Welcome, Andrew.
Hello again.
As tradition goes, a series of announcements are expected to be made at the week-long National Congress of the Communist Party of China to frame the new leader in a good light and as being truly in charge of the world's second largest economy. What are they likely to be focused on?
Well, certainly I think the major focus will be, will the new guy be a reformer, and will he be able to maintain the constant steady growth that China has experienced over the next 10 years? These are possibly the two major events or major focuses, I believe.
And how will the Communist Party actually manage to ensure that strong growth will be the norm for its next 10 years of rule, while introducing perhaps much needed political and economic reforms to appease its increasingly frustrated population of 1.3 billion?
Well, yes, the speed of reforms that we've seen over the last 10 years has certainly slowed over the past 2 to 3 years as the leaders have got bogged down in a slowing economy and certainly a global mess, shall we say. I think now is the time for them to get back on track, and if the people get in that are expected to become the leaders, then they're expected to introduce reforms. I think one of the ways they can tackle the domestic unrest is to fight corruption. That's something that really does rile the local population, and I think this is also tied into very much to how much the state-owned companies monopolise a lot of the economy. So that then we might see a shift more to, as we've been saying in the G7 space, about a micro economy rather than the macro economy. I think these will be some of the major focuses. Another area that might become an issue is the fact of the growth. We've already seen growth targets reduced over the past few years. We're looking at more of certainly a lower rate, but a more sustainable rate, and it's a question of whether they can introduce the measures and the ideas to get this growth fulfilled.
And in terms of Forex, are there reforms on the horizon, like perhaps loosening renminbi restrictions, or is giving into foreign pressure concerning China's currency akin to losing face to the people which it needs actual wholehearted support from?
Well, certainly we've had quite a few moves in the renminbi over the past few months. Some say it's been tied into the US election to prevent some kind of China bashing as part of the electioneering. But generally, China tends to manipulate or manage its exchange rate when it suits them best and how it suits them best. They look very much on the domestic situation rather than the external situation. And it's only when bowing to external pressure suits the domestic situation, then they will actually go ahead and adjust the exchange rate. So as it stands at the moment, I think it will be status quo. I can't see them opening up the markets very quickly. Any change in increase in the capital markets or opening the currency to outside pressures will be a very slow process. Nothing within the first 2 to 3 years, I don't think.
And otherwise, generally, what are the immediate challenges once the dust settles for Xi Jinping, who will replace Hu Jintao as leader?
Yes, I think the biggest question that we're facing is whether it will actually be these two guys in the top two positions. In the Chinese blogosphere recently, we've had some rumours and reports that maybe the Politburo is going to be stuffed full of conservatives and hardliners. Under those circumstances, it could become very difficult for him to push through any kind of reforms that he wants to make over the next 10 years, maybe even the next 5 years. So I think that will be the major issue, depending on how the Politburo is made up.
And China will actually release a slew of data at the end of this week. We have CPI, PPI and industrial production on Friday, followed by trade data on Saturday. With price increases expected to be modest and production seen perhaps taking a tick higher, is the Chinese economy then seen to be on the right track growth-wise?
Well, certainly, as you say, the inflation is expected to remain pretty steady at 1.9% year on year. We know that this has been an issue with the People's Bank of China. They have been worried that inflation might start to tick up again. But I think generally, if it stays where it is, then it might give a bit more leeway for the People's Bank of China. Having said that, they've been very active in pumping liquidity into the local markets, not cutting rates, not reducing the reserve ratio requirements, but injecting cash. And that is slowly filtering through into the system. So I think we are maybe seeing that China has bottomed out in the third quarter, and we'll see slightly better growth into the fourth quarter.
So of these reports, will most focus be on the inflation or industrial production? What's your guess?
I think they're all pretty much as important. If we look at the economy as a whole, then certainly the inflation numbers and the industrial production numbers hovering at around 10% growth year on year. That's been pretty steady the past couple of months. And if we see a slight uptick in that, then that will be very positive. Retail sales also hovering around about the 14% annual growth. That's again been pretty steady. So it's we need a slight uptick to just show that the domestic consumer is getting a bit more active. That's from the domestic point of view. Externally, obviously, I think the imports will be very important, especially for Australia. If we see an uptick in imports, then it probably means that China has started to restock its stockpiles of resources, and that should be a positive for the Australian economy and perhaps vindicate the RBA in adopting its no-change policy yesterday.
Could it be said then that Chinese government growth supportive steps are finally kicking in?
I think so, yes. As I mentioned, I think we've probably seen a base of the current dip in the third quarter, and the stimulus measures that they have done seem to be working their way through. Last month's data was the first positive that we've seen in a few months, so I think we just have to see what this month's data is like, and if it's continuing the upward trend, then we can say possibly in the near term that they have done enough to turn the economy around and stop it sliding.
Thanks for your insights this week into China, Andrew.
You're welcome.
See tradingfloor.com for more of what Andrew is writing about the Asian region.